in passing the entry or doing appropriate correction. So they have to be also appropriately advised. If you are really not an accountant, don't do the job of an accountant. But even if we know yes, what kind of furniture I want, we always take service of interior designer when we do the furniture. So same way, those people must take the service of accountant or chartered accountant when books of accounts are being written. So that's extremely important. So care to be taken while filing the return of income. Survey has taken place. Your statement is recorded. Your books of accounts show something, and your actual stock and actual cash and other transactions are showing different. I am talking first pre-amendment situation and then after amendment. Because as of now, you will be having both kind of cases where survey had taken place prior to 31st March 2016, after April 16 to 9th of November 16, 15th December and thereafter. So there are three phases of the situation. Prior to March 16, not for SS year 17-18, the law is very clear, absolutely settled that if the survey has taken place at a time when accounting year is not over, or accounting year is over but due date of filing the return is not over, you disclose the same in your return of income. Excess cash you disclose, excess stock you disclose, advances found out you say yes, earned out of business and disclose, and you pay the tax on that. If 15 December or 15 March has not left, please pay advance tax also. So to that extent your burden of 234B and C is also correspondingly reduced. And when you file the return of income, yes.
Under which head that additional stock should be disclosed?
Prior to 31st March 16, there was no problem to show income from other sources. After 1st April 16, situation is totally different. But even in that, if you write out transaction terms of purchase and sale outside the books, purchase is outside the books, sales outside the books, profit and outside the books, no problem. So that can be mentioned. But it was purely that yes, I don't remember. Because I don't remember, why? Because I have not written my books of account. Why I have written out in my regular books of account? Because they are outside the books of account. Therefore, I am saying income from other sources. And pay advance tax, pay tax on that while filing return of income. Penalty in the section 271(1)(c) as applicable up to 1617 cannot be imposed because the levy of penalty presupposes the difference between income as per return and income as per assessment. Because you already declared that and you cannot add 1 rupee more, that cannot be a question of penalty. There are officers who are writing in the order. Had I not taken the survey, you would have not disclosed. Because I did the survey, you disclosed, and therefore I am doing the penalty. And there are decisions I have quoted that these are all on the surmises and conjectures. Why you presume that because of survey only? I was waiting for 31st March. I was waiting for my part-time accountant to finish my books. I was waiting for my chartered accountant to advise accordingly. I was about to do it, but unfortunately you came prior to that. And therefore I disclosed. So there is no any situation adverse or contrary to the SSC that you will have any phase. There is no penalty in the section 271(1)(c) can be given. So don't be afraid. But that is, as I said, only in those two situations. Survey taken place for the year ending, which is not over, or year is over but due date of filing is not over. Material found out, clinching evidence found out, confessions made, or revised and filed for earlier years, that is not for 16, 17, but for 15, 16 or 14, 15. You say, okay, clear evidence are there, I have no option but to accept. You file the revised return, penalty would certainly be imposed. I mean, I am using the word certainly because presuming that yes, there is unaccounted transactions or unaccounted income. Not going on Shadilal Sugar or Reliance Petro that yes, you had bona fide belief of making a claim or incurring an expenditure which you thought were genuine business expenditure, all the technicalities I am not going. But prima facie, be very clear, early years you have a problem, later years you don't have a problem. There are some smart SSCs, even now, who always believe I will file the return in the month of March and not July. As you all know, the due date of filing return 139(1) is July or October or November, as the case may be, but you can file till the end of the next financial year. So they always file the return in February or March Why? Because let me wait. If during some time search or survey takes place, I have not filed the return, and therefore my return to be filed under 139(4), I will be in a position to declare the income. But be very clear, friends, at least in Ahmedabad or Gujarat charge, they have issued 100 notices of prosecution under section 276 capital C, which says if the return of income is not filed as and is required in section 139(1), the prosecution will be filed. On one side, law permits you to file return under 139(4), but 276C has not been amended, and therefore they are proceeding with the prosecution. At least on those cases where they are habitual defaulter by filing income residence late. So it's strong advice to all the chartered accountants and advocates that you must insist your clients to file return of time. I think our is the only most unfortunate profession where we in turn remind clients, Bhaiya 15 December aaya, Bhaiya 15 March aaya. Doctors never telephone you that you have diabetes, how is it? Or you had blood pressure last week, how are you? Aana to how? Nito. But so far as CAs are concerned, we remind them by mail, we remind them by postcard, we remind them by letter, we remind them by SMS. But that's, we believe, service above self. So we are doing it. But clients are still not conscious with regard to that. And therefore, this point I thought I should mention.
This 276C will stand, you said?
They have filed the prosecution.
They have filed it, but whether it will stand.
I think we have a strong case to say that you can't prosecute me when your own same act permits me to file return later. But they are doing it only with an idea that from now onwards, your client or this group of SSCs and the message goes that no, I must file. See, I tell you, I was going to say about this later on, but let me tell you, the seriousness of the compliance of the provisions of the law in India, for whatever reasons, we blame to X, Y, Z, government officials, bureaucracy, ministries, professionals, is minimum. I tell you difference. My father used to tell me those years also that Godfather, he had committed number of murders, number of illegal things. He was never caught by any provisions of the act. He was raided by IRS USA and he was found to have interpolated various entries in books of accounts. And in income tax it was proved that there is a severe concealment and he was sent to jail under Income Tax Act. Not under criminal provisions, not under any other provisions of US laws. And the second example, when our Rakesh, when we went upstairs, Indira Gandhi asked him, how do you feel? And Upar said, India kaisa dikhta hai? And those who remember, he said, I'm very fine, thank you madam. Sare jahan se acha Hindustan hamara. That was the answer given by Rakesh when he was on the first astronaut of India going. And first astronaut of USA, when he went upstairs, the president of USA asked him, how are you, how do you feel? He said, I'm fine, Mr. President, but I am upstairs and the last date of filing return of income is over. What shall I happen to me? I mean, he was worried that though I am in the moon first person, but what will happen to my, and here, sir, I am going to Ahmedabad from tomorrow and then I will be at Baroda, baad mein bhanenge. You know, you tell him, bhaiya, please file, 234 ka interest hi lagna hai. This is the difference. So seriousness of compliance of law is required to be literally injected by us on all the SSCs. And that I will deal with when I will come with the embedded provision. I won't say draconian provision, I won't say strict provision. Extremely required provisions in Indian culture. Yes. Internally includes me, internally includes all of us sitting here. But unless that happens, things are not going to change. I mean, in wildest dream, forget the Honorable P. I had not thought that out of 15 lakh crore, 14.9 crore would be redeposited. But I was confident, 1 lakh, 2 lakh crore to aaram se nahi jayega. And see the smart Indians, 97% of them have been redeposited. Connivance of bankers, connivance of officers, connivance of RBI representatives, whatever it was. Advised by consultants, you know what has happened in Delhi, Surat, Rajkot. And Rajkot, when my learned professional brother was arrested, he said, oh, is it illegal? I thought it is possible to be done. I mean, he was exchanging the notes. And he thought, what is wrong in it? I mean, see to what extent the people have anchored this, they have taken and become confident to make a breach of law. That's the difference between Mumbai and Ahmedabad, I tell you, and I'm really proud for that in Mumbai. And here, the moment there is a yellow light, either it is taxi driver or person in Mercedes or Maruti puts a brake, every signal in Mumbai. In Ahmedabad, the moment there is a yellow light, accident. After red light, at least 10-15 vehicles pass. honestly, and police does nothing. The worst traffic in India is in Ahmedabad. Zero accidents. Why? Because there is no enforcement. In Mumbai, you dare crossing, you have a challenge of 100 or 500.
Sir, even in Pune.
I'm happy to learn that. Like Ahmedabad or like Mumbai? That's what I'm saying. Except Mumbai, I mean, let me tell you. No, I would give further compliments, sir. And it's all compliments. Because I had done my articles in Mumbai for 3 years, 72 to 75. And this lane was my first lane. Even now, it is my most favorite lane. Because I started my first audit of Travel Corporation of India, which had a head office next to Khyber. And my famous joint for lunch was Copperchip, which is still there. So I have great regards for Mumbai professionalism. The way professionals do the service here, be it chartered accountant, lawyers, advocates, even dry cleaners or police person doing the police. I mean, even if Nehru was blamed that he is sending his suits to Paris for dry cleaning. I have clients in Ahmedabad, Baroda who are sending their suits for dry cleaning to Mumbai. So that's the difference. Anyway, let's come to that. Importance is, as I said, sincerity to compliance of the law. And if that is not there, whatever are the amendments, whatever are the provisions, the liberal interpretation by Honorable Tribunal and in turn by Honorable High Courts and Supreme Courts will nullify all these arguments. Therefore, it is our duty to see that yes, how best we can take care of this. So, levy of penalty, I have given the decisions, number of them, that in case of survey, if you are disclosing the income and filing the return of income, paying tax, appropriate reverse also paid, no problem. Seventh important question was whether income declared can be capitalized. Typical Ahmedabadi nature. You have paid the tax, but क्या करो? Cash मिला था, उसमें ना हो. I have very clearly mentioned, if you have found excess cash, if you have found the excess stock, certainly you can bring in the books of account. So there is an excess stock. As per books, we had a stock of 5 lakhs. Physical stock was 7 lakhs. So 2 lakh stock is already to be brought in the books of account. That is capitalization. But any other income disclosed other than cash and stock, debtors, recoverable, receivables. Now you say yes, Mr. Sunil it will be 20,000 back and Mr. Hitesh may pay 50,000 back. Or shortage of cash and I paid to X, I paid to Y. All kinds of those things certainly not advisable. So capitalization only and only if these two kinds of assets are found out, which are outside the books, which are otherwise required to be brought in the books, which are now doing it after the survey stage. But bearing that, certainly implications of partners, question was asked. I am very clear, I think Mr. Kalsawar was also very clearly saying. One proprietor disclosing different issue, 2 partners, 3 partners, 15 partners, or even LLP. One partner declares that this is the income of my firm, it is binding on every single partner. If there are prima facie evidence and material available, then it cannot be of myself. Because whatever I am doing as a partner on behalf of the firm. This stock, this cash, these papers, these notings, these diaries, whatever is filed are with regard to the transaction of the firm. And when you are asking me, I am confessing yes, firm has indulged it, I as a partner accept it and disclosing it. There cannot be a case when another partner says no, he was not in right state of mind, वो तो पागल है, कुछ भी बोलता रहता है, कुछ लिखा दिया, I am not acceptable. Unless, as I said, that person, partner himself is in a position to retract, then another partner can retract. If A is in a position to retract, was given the statement, then only B can retract. Otherwise, whatever A has stated, acceptable to B. In fact, in lighter terms, I was telling in my lecture earlier, when this voluntary disclosure was coming, there were, if you want to harass other partners, what to be done? So you disclose, rupees 1 lakh earned from the partnership firm. So you mean you are disclosing 1 lakh from your partnership firm, your share is 10%. So automatically 90% would be of the other partners. You want to harass them. It was possible because you are declaring in the voluntary disclosure scheme, again like ideas, on both you are paying tax and you are mentioning that I earn from firm. Meaning you are implicating the firm that firm earned earn 10 lakhs or 1 crore and from that 10% I earn 10 lakhs. Therefore tax 90% of that. But nobody did, fortunately. But I was telling that this could happen if you want to really have it. But otherwise, genuine declaration of a partner on behalf of the firm is binding to that partner as well as all the partners and the firm. Be very clear on that aspect. Directors also. The director is disclosing on behalf of the private limited company or public limited company, whatever the case may be, and it is binding on the company other directors. Certainly, if any action is being taken under the Companies Act, it would be on that director only, because he had kept other directors in dark. He did the mischief, he did the thing outside the book. So whatever action to be taken, but now, role of independent directors being important, if it happens in public limited company, it's very, very risky. And therefore, you don't find many professionals accepting the position of independent directors. You don't know what MD is doing, you don't know what other directors are doing. And if you are not watchful with regard to the gross profit, with regard to the yield, with regard to the expenditure, with regard to the personal expenditure being debited in the companies, auditors not taking care of, even if big fours are there, because they do test checking and sampling and systematic audit, it is missed. All consequences could be there on all the directors and not on the sole directors. But otherwise,
what happens in a case where there is a group of companies and flagship company where there is a managing director gives a disclosure on behalf of rest of the step-down subsidiaries where he doesn't have any directorship, he doesn't have any shareholding. But as a group of companies, there is a disclosure.
See, I would put it this way. If flagship company is A, there are 10 subsidiaries company down the line, and 10 crore rupees are earned, or 11 crore rupees are earned. You can say, okay, 1 crore on flagship company, and 1 crore each on all 10 subsidiary companies. Per se is not a valid statement. So he has to disclose all on behalf of the company which is a director and involved in the day-to-day management and affairs of the company. If he is not involved in the affairs of the other 10 companies, he can't. Unless all other 10 directors of those 10 companies are also so faithful and respectful to that director. Yes, whatever my director said is correct. They accept that. They confirm, then that statement would be valid. But single per se statement of that director of flagship company without concurrence and confirmation of the subsidiary company directors is not at all binding. Certainly not. Now come $1 million question, which is most controversial. 197B.
Statement given by ex-director.
Ex-director is an ex. We have to ax him. Unless, no. There is a, what I was trying to say. And exception. He resigned in the month of October 2016. Survey has taken place on November 16. And he was involved in the affairs from April to 16. Then certainly his statement would be relevant. What otherwise? So now we come to that 197B, 197C. I mean, it is not in the Income Tax Act, it is in the Finance Act 2016. If you see the chapter, it says chapter 9. If you see the heading, it says Income Disclosure Scheme. If you go to section 197, the title is Removal of Doubts. And then the sentence starts, for the removal of doubts, it is hereby clarified that if any income is earned in the assessment year, or any asset is found out in any assessment year, prior to the period, then the assessing officer can issue notice in the 142 or 142(1) or 153A or 153C, and the income or the amount of the asset of that year can be added in the income of this year. Short controversy, though I have written about 2.5 pages, clear opinion on this. Question is this per se for the entire Income Tax Act, or it was meant only and only for IDS? My strong view, though I have no authority, let me use the word authoritatively, I am saying that it cannot be used for the general assessments in all 142(1) or 143(2) or 153 cases. It was meant only during the era or period when IDS was there. That you are filing the return or you are filing the disclosure, you are telling them 6 years are over, but I want to disclose. So, okay, you would say, I am issuing 153A, you disclose under IDC, you had purchased in 2001 a bungalow for 10 lakh, market value is 1 crore, you pay now 45 lakhs on that, and your 1 crore bungalow is now official. And people have done it, because that 1 crore rupee also effectively was of worth 5 crore. And he was prepared, and after this disclosure is accepted, I will sell it of 5 crore rupees and get my balance appropriate. So it is only and only for that IDS. It cannot be for general. Why I say so?
Though in statement, question and answer, they said it's a letter law.
Yeah.
But
I will produce that CBDT FAQs question also. After the scheme is over, if it is found out that asset is in possession of income or wealth for a period exceeding 6 years, can you issue the notice and the income can be added? And CBDT FAQ said yes. An extremely erroneous view. Section 147, read with 148 is very clear that you even go to 44A and rule 6F, you are not required to maintain the books of account for a period prior than 6 years. Now let us analyze them in 3 different categories. There is an asset which is founded which pertains to 2000. You are in 2016 or 17 and you clearly say yes, this is of 2001, I have purchased outside the books of account. Can he edit? No. Under no circumstances you have to invoke 147, issue a notice, there has to be a results recorded and jurisdiction available for limitation. The fundamental principle which has been very nicely pronounced in Parshuram Pottery Works. Please go to page 13. Now there cannot be an endless litigation or endless compliance of law. Every single law must stop somewhere. There has to be a limitation somewhere. The principle of limitation and time barring of cases has all along been recognized in the Income Tax Act. For the reason that underlying jurisprudence has dictated that there has to be a finality of assets. You have seen my books of account for 2000. You have finalized my assessment of 2001, 2 under scrutiny or 141A. After that is over, I waited for 6 years, I restored the books of accounts. Now I have no evidence. My mere saying or your finding out that it was not there in the books of account is no material, is no evidence whatsoever. And therefore no evidence can, no addition can be made in 1780 or 1890. That's point number 1. Let me finish the observation of Supreme Court. And state issues should not be reactivated beyond the specified period. This is nothing but reactivation. Your assessment is done, time bar period is over, and now you are saying no, I will bring it back. But I am coming to the surprising announcement, which if you have read Hindustan Times today, I will come to that. Lapse of time must induce, depose, and set at rest judicial and quasi-judicial controversy, as it must in other sphere of human activity. Even in human activity, we don't. I mean, you are a child, then you are a grown-up child, then you are a student, then you are a youngster, then you are a, I mean, in the Baravasta, Yuvavasta, and Vanaprasthashram and Grihasthashram. So there are phases. Once that phase is over, you can't re-enter that phase back. Same way, there are phases in human activity, there are phases in laws. So you can't go back. A useful reference, therefore, is in this Parshuram Pottery. You did that. Therefore, now to say that in search I have been found and I am lots of promissory notes which were obtained by giving cash advances for the year 2006-7. Unquestionably they are promissory notes, unquestionably they were not in the books of account, or I am not in a position to show. Can those promissory notes or can that property which has been found out for which document is there but there in my balance sheet that is not shown can be added? That's a $1 billion question. My answer is that yes, I had books of account, I had evidence. If I want to stand live, or legally, if I want to say you cannot, because that is time bar, that is over. Section 147 does not permit these things to you, and therefore you cannot. So, more secular, and with all respect to the civility, is absolutely contrary to the truth.
So, as you said, 2006, there was a property available, we not shown in the books. But 2016, the property is still not shown in the books. At that time, they can tax it and
So,
say.
that is what I'm saying. So, now in 2016, they would say this is not in balance sheet. I said, I have forgotten to pass an entry in that. I have purchased in 2006, I had debited my books of account. If it is the balance sheet, you are the safest. But if it is not in balance sheet, then you say. that please find out whether I purchased in 2006 outside the books of account. Question, there are two. One is not showing in my books of account is a mistake, genuine, bona fide or intention. But question is, did I intentionally not disclose in 2006 and now we are taxing in 17-18 by issuing 153? Cannot happen. And corollary to the consequence department. That is, the department has found out various material for six years. I have unaccounted income in 2011, I have income in 2012, I have unaccounted income in 2013. Moment 153 is issued, I would say read your section. That it will be added in the year in which notice is issued. Therefore, all 11, 12, 13, 14, 15 income I will offer in 16, 17. If I read the interpretation correctly, I am allowed to offer all the income in 16, 17. So I save on interest, I save on penalty. How can that be? So from the department point of view also it is ridiculous. From assessment point of view also it is illegal. Only thing is, you must be aware I have brought 3 decisions. Ahmedabad, Gujarat High Court and Ahmedabad Tribunal. Very interesting decision. Search has taken place, loose materials and materials have been found out for all the 6 years. Notice in the section 153C were issued because material found out on somebody else's place. I disclose in all the 6 years various income which I did not disclose in my original return of income. So my original return income was 1 lakh, 1 lakh, 1 lakh, 1 lakh for all 6 years. Now I am disclosing 10 lakh, 10 lakh, 10 lakh, 10 lakh in all the 6 years. I am paying interest, I am paying tax. Additions, assessment is paid. What is assessment? 10 lakh, 10 lakh, 10 lakh. Whatever 9 lakh unaccounted were found out, I have disclosed. Then penalty in the section 271, 1CD levying on that. For 11, 12, 12, 13, 13, 14, 14, 15, 15, 16. For current year, 16, 17 cannot be.